Hey everyone, just a quick sound check. Thanks for joining in. Good morning, good afternoon, good evening, depending on where you're from. So we are going to move on to kind of the second part of the whole thing, following the NFP numbers. Good evening, commodities traders. Nice. Okay, just a quick sound check. Let me know if everything is okay and we can get started. So this is news trading session number 2. We are going to talk a little bit about some theories on news trading. Not really going to go into any particulars in terms of news, but really more on the general how to trade news. All right, we're going to be using pending orders. That's basically what we are going to be talking about today. Pending orders, right? So we want to make some clarifications on some of the pending orders, how you can actually use them to help out with your trades, and then we can get started. All right, so welcome back everyone. Another new week for trading, second week of May. My name is Firahin Joro. Let's get this started with a quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. Okay? So yeah, you can obviously get the promo code to double your deposit bonus. I'll show you the code after this, and then you get access to the private Telegram channel as well. So you are going to get that through the an email if you registered for this webinar, for that access to the Telegram channel. Okay, so let's talk a little bit about what we are going to be discussing about tonight. We're going to talk about advantages and disadvantages of news trading. I'll probably go in a little bit detail on what are those stuff, right? We'll talk more about the advantages, obviously. Most profitable news for trading. There's a lot of news for you to trade. And then when it comes to news trading or fundamental trading, we're going to be taking a look at the general price action. It's not going to be 100% or anything like that, but just to give you a general look on how market reacts after news and stuff like that. This is likely going to be different from what the NFP number was. We had a separate session for the NFP last Friday, if you guys missed that, and if you guys managed to catch on to the second part of the trading, it would be to fade the initial release. I think you guys were doing well if you guys faded, but yeah, we'll talk about some general rules for news trading, and then we'll talk about the buy stop, sell stop strategy, which is something that we have already touched base on last Friday. We will talk more about the buy limit and sell limit strategy. I do have some thoughts on the buy limit and sell limit strategy, but we'll show it to you, and then you can decide which one it's the much better proposition for you guys. Okay, so you can use the code nonfarm 2023. Okay, this code is only valid until the 17th of May 2023. This is doubling your deposit bonus. So if you want to use the code, use it quickly, because we're already on the 8th. This is only going to be valid until next Wednesday. Okay, so let's take a look at advantages and disadvantages of news trading. Number one would be, let's talk about the advantages first. Okay, all the necessary information can be found in the economic calendar, so there's no need to delve deeply into the technical and the much deeper fundamental analysis. Now, when we talk about news trading here, let me just clarify a few stuff. All right, when you talk about news trading and the news trading that we are going to be discussing tonight, it is not the same as a fundamental analysis. Okay, news trading is basically trading on the release of that particular news. Okay, if you want to delve deeper into understanding what that news is, understanding the context of that news, then that's more towards fundamental analysis, which is it takes some work, right? It's not going to be an instant thing. So we're talking about two different things here, right? When we talk about news trading, it's really not fundamental analysis. News trading is basically trading when a fundamental news or fundamental data is released, right? Or if something happened in the market and then you need to react quickly, that would fall into the news trading that we are going to be discussing tonight. We have a separate webinar for fundamental analysis, so we're not going to delve deeper into what those fundamental we really want to focus on how you actually can trade the news. Okay. You can rank the calendar events by the importance. It will help you in making informed decisions, right? And I'll show you the calendar after this, but no, you know what? In fact, I'll show it to you right now so you guys can see what the economic calendar looks like. You can access it from a different sites, obviously. I like Trading Economics. I like this one a lot more than Forex Factory. I think a lot of Forex traders goes to Forex Factory. I think that would be the oldest source of fundamental information. I used to use that when I was trading. When I started out trading, I used Forex Factory. I think I was pretty much one of the first few users of Forex Factory. So Forex Factory is there if you want to use it. You can use investing.com if you want to. You can use tradingeconomics.com if you need to. You can also go to OctaFX website and there's a calendar section that you can use, right? But just to give you a general comparison, this is what a Trading Economics website looks like. Let me zoom in a little bit so you guys can see what's on the news today. The UK market is closed today, so you're not going to see a lot of stuff coming out from the UK. But yeah, if you go to Forex Factory, it'll actually be pretty empty because I can filter out some of the key events that I want to see. So we've got holidays that's going to be highlighted. So today and tomorrow, news are fundamental news are actually going to be pretty sparse. You're not going to see a lot of stuff, but you can use the filters. Right, if I want to see just the high impact news, I can filter that out. If I just want to see anything that has to do with the US market, for example, I can just filter it out and look for any US news this week. So it gives you a specific time, obviously, depending on where you're from, but you can obviously adjust it. Right now, I have everything set up to GMT 7, right? But you can go UTC or GMT, right? Doesn't matter. Some website call it UTC, some website call it GMT. But yes, this is going to be based on the UK time if you go with the GMT. But yeah, you can adjust it to whatever time zone you want it to be, so you can have that information according to your time zone. All right. What's good with this is that you can filter it out. If I want to have only high impact news number, I can have that, right? So you can adjust it, you can filter it if you want to, and looking at a calendar is not hard. Okay. Statistical reports or this release can significantly increase volatility, leading traders to potentially earn large profits and potentially lose a lot as well if you got it wrong, right? Statistical data or statistical fundamental news, it's really something that's kind of guided or scheduled, right? For example, the NFP, there's a scheduled release for that. With the CPI numbers, there's a scheduled release for that. The FOMC decisions, the ECB decisions, Bank of England's decisions, like this week, that's going to be Bank of England. Those are scheduled events, right? So you can actually plan ahead before a certain news come out. For example, if you're not into news trading or you think the volatility could affect your trading, you could avoid it by having a look at the calendar, obviously. But if you want to be trading those news, you can only tune in. I mean, you're given a choice to tune in at a specific time. So you don't actually have to wait, for the whole day for any potential price movement. Obviously, and when we go into technical analysis or fundamental analysis, you kind of get a much larger picture. But if you don't want the fast, you just want to sit there, jump in, trade a news release, you can do so, at the time when that particular news is being released, okay? So the simplicity of fundamental news trading is that you don't have to learn complex technical analysis tools or to draw the most complicated shapes on the chart. You need to be able to follow the economic events in the calendar and make a trade based on the news release and close it based on the market reaction. Simple as that. So again, let me clarify. The topic tonight is news trading. It is not fundamental analysis. Fundamental analysis is a completely different animal, right? It's a completely different section. We're not really touching base on the fundamental analysis part of trading. Really want to focus more on news trading. Okay? So when you trade based on fundamental news, there's often a minimal time expenditure required. Traders can know exactly when to go to trade to the trading platform and what actions to take based on the news release. Trading process itself can often be completed within just a few minutes, allowing traders to efficiently make trades and move on to other tasks. So these are the advantages of news trading. Okay, if you trade on news releases, that's are going to be your advantages. It's not hard to figure out the calendar. It's pretty easy to filter out what you need to see, what do you think it's going to be market moving. Okay, it's very simple to understand. It's not complex, like I wouldn't say complex, right? But with technical analysis, you kind of need to figure out the basics, right? You need to understand on how to actually properly draw a trend line and how to use the other technical indicators. When we talk about fundamental analysis, you will need to understand what is that news being released for, and then figure out the context on how it can be applied to the market at that very specific month. Okay, but with news trading, you don't have to delve deep into that. You just go to your computer, turn on your trading platform. If a news get released at 7:30 a.m. in the US in the morning, then you be ready at 7:30 a.m. or 8:30 a.m. depending on whether or not it's going to be daylight savings, right? Depending on where you're at. But typically news releases in the US, important news releases get released at about 8:30, 7:30 a.m. But yeah, just be there, get ready, set up your trades, and then just trade on the news. You can close it manually if you see the market reaction going in your favor, or if not, you can also use stop losses and target levels if you want to. Now, let's talk about the disadvantages, because there are pretty big disadvantages when it comes to news trading. So in trading, it is important to remember that the market can be unpredictable and not always following the logical thinking or common sense. Now, this is something that we touched base on last week. And if you watched the Outlook today, I gave you an in-depth and pretty long explanation on what really happened last week. Why wasn't the NFP number boosting the US dollar? I was expecting the opposite as well. If the number was bad, it could actually boost the US dollar. So I did talk a little bit about that in the Outlook. If you haven't watched the Outlook, go and watch the Outlook. I explained it. We also touched base on this last week as well during the NFP release. So yeah, it can be unpredictable. And doesn't always follow the logical thinking or common sense. So you need to understand the context of what that news is and when it's released and what it's for. So if you understand fundamental analysis, great. If you don't, then this would be one of the key disadvantages. Sometimes it doesn't make sense, right? For example, if you're expecting a negative news coming out from a certain country, and you were shorting that currency, and then all of a sudden the news release was bad, but the currency went up the other way. Now, let me give you a potential case for this week. I'll give you two, in fact. Number one is the CPI this week. We can talk about the CPI right now, but we'll trade that CPI on Wednesday. We'll have a live trading session. But let me give you a little bit of an insight to what it is, okay? So let's take a look at the inflation rate year on year. This is the year on year CPI from the US. So previous number is at 5%, right? The consensus is at 5%. Now, if someone were to ask me, hey, what do you think is going to happen to the US dollar if the inflation rate comes in as per consensus? This is going to be tough to call because market starts pricing in for this release pretty much right about now, okay? If, however, there's a surprise to the upside, we need to understand how big of a surprise to the upside it was. Okay, if it's a surprise to the downside, how big of a surprise it is to the downside. But in general, when we talk about this inflation number, it's pretty straightforward. If we see a high inflation number, all right, then we anticipate the FOMC to step in, and they need to hike interest rate, which is something we will talk about on Wednesday. But just to give you a little bit of a guideline, okay? So if we get a higher inflation number, it would actually be beneficial for the US dollar, even though it's actually not that great for the US economy. In the context that the FOMC needs to hike interest rate, and market are going to be concerned again, and that's going to be boosting the US dollar. If the inflation fall and it drops down below 5%, that's going to be bad for the US dollar. So with news releases like this, you need to understand at the very least what that news is. How is it going to be applicable to the currency that you're trading? Now, the second example would be the UK GDP growth. So we've got the UK GDP growth. There are obviously three key numbers you need to look at. Number one, we need to look at the year-on-year GDP numbers. And then we look at the quarterly GDP numbers from the UK, and then we'll take a look at the monthly numbers for the UK. So what if the economy doesn't grow? All right, we'll focus more on the quarterly numbers. If the GDP growth is at 0%, that's going to be bad for sterling. Right now, you're looking at sterling probably gaining in the market, I think, before I jump into the webinar. That could change when the number get released on Friday, if it's surprisingly showing that the economy or the GDP generally doesn't grow at all. Okay, so at the very least, understand what it is that you're looking at. Okay, all right. When it comes to trading, not all news is created equal. There's a lot of news out there. Okay. Some news events may generate significant market volatility and trigger strong reactions, while others may barely cause a blip on the radar. Maybe to give you an example, we saw a little bit of a strong reaction during the NFP release, but following that, we don't actually see any strong reaction in the market. All right. At the end of the day, does it cause a blip in the market? It pretty much does cause only a blip if you are a swing trader. With the CPI numbers, sometimes if it moves the market in a ridiculous volatility, the range pushes up ridiculously. Sometimes when it gets released, nothing happens. Okay, so there are probabilities in terms of ranking the importance of those key events. The higher the impact, the higher the volatility is likely going to be, but it's not going to happen all the time. Okay, if you take a comparison to the ISM manufacturing PMI, for example, and you compare it to the NFP numbers and you put it on the same scale, it's not gonna be equal. It's not gonna be balanced, right? The ISM manufacturing PMI, for example, doesn't become important every month. Okay, however, it might become important depending on what the market is looking for. If the market is looking at potential growth, if the market is concerned about recession in the market, in the economy, then the ISM manufacturing PMI carries with it a little bit more punch. Okay, but generally speaking, if you take a comparison to the with the NFP numbers and the ISM manufacturing PMI, for example, the ISM manufacturing PMI weighs a lot less than the NFP. So the NFP is going to be a more of a high impact news. ISM manufacturing PMI is also categorized as a high impact news, but it doesn't carry the same weight as the NFP numbers. Okay. If a trader is unable to correctly predict market direction or analyze the situation, they may suffer a substantial loss. So you can gain large profits in a very short period of time, but if you get it wrong, okay, if you're on the wrong side of the market when news get released, then yeah, you may suffer a substantial loss. And that's kind of the more of the bigger disadvantages when it comes to news trading, because you have a lot to deal with during news releases. You need to be quick, you need to be agile, you need to make your decisions very quickly, you need to decide very quickly whether or not you want to keep that positions or not, right? Okay, so let's talk about the two categories in the market. The most profitable news for trading, right? We're just gonna list out a few. It's basically divided into two categories. Okay, we've got the periodic news, that's the scheduled announcement, and then we have the hot news, right? Or the breaking news, that would be the unexpected events, which includes terrorist attacks, military conflicts, natural disasters. As such, the national currency becomes much stronger as investors get rid of stocks which are about to fall. So let me rephrase this, okay? If there's a terrorist attack in New York, again, not saying that's going to happen. Please don't happen, okay? But we saw what happened with 9/11, right? It causes a collapse or a sudden shock in the stock market, okay? What we saw with the tsunami in Japan, it causes repatriation of the Japanese yen. What happened with Ukraine and Russia, it causes a surge in oil prices or energy prices. So these are the unexpected events. These are what I would say more of a market risk rather than anything else, right? It's really something that's not predicted. It comes by it comes in and surprises you. It surprises the market. So that's hot. Okay, and then we have the periodic news, which is what we are going to be focusing on a lot more. Comes out regularly. Not quarterly reports, but every month we are going to get quarterly reports of the companies, and then in terms of economic data, we've got the monthly report. But there are different ways to look at it. You can look at it from a monthly gain, you can look at it from a quarterly gain, you can look at it from a yearly gain or annual gain, right? But here are some of the key news that would be, I would say profitable. Yeah, most profitable, and there are more risks involved. Yes, the highest volatility, I would say. Okay, central bank meetings and monetary policy decisions. Okay, foreign exchange market reacts to them by, when they raise and lower interest rates. And then we've got the quarterly GDP reports. Again, with the GDP reports, I really want to focus a lot more on the quarterly numbers, but we'll take a look at the monthly and the yearly as well. Inflation numbers. We've got the CPI, PPI, and then we'll take a look at the core inflation. The CPI and the core CPI are something we're going to discuss on Wednesday. But when we take a look at the inflation indexes, we've got the consumer price index, PPI numbers, and then we also have the PCE numbers, personal consumption expenditure index. That would be part of the inflation index, right? PPI is producer's price index, by the way. Indexes of business activity in manufacturing and services. We already talked about the ISM manufacturing index and the services PMI, and ISM services, right? These are going to be the PMI numbers. Then we have the unemployment numbers, which is what we talked about last week on Friday, which is also the NFP numbers and also the average hourly wage as well. Okay, so those are news that you want to focus on, and if you are confused with what it is, I would just keep it simple. Go to the economic calendars, depending on what you want to use, and just filter in those high impact news. Right. Some website like Forex Factory, you can focus more on the growth, inflation, employment, central bank. You can get rid of bonds, housing, consumer surveys, business surveys. Doesn't carry a lot of weight. Speeches, they're a little bit random. It's a little bit on the unpredictable side. You can kind of hide it, right? So this, for example, these are going to be just the datas that's going to have that high impact in the market this week coming out from the US. If you trade other currencies, for example, the euro and the sterling, you can add it in. right? Just put it in there. This week we don't actually have a lot of stuff, so we only have numbers from the US and also from the UK in terms of high impact news. Okay. All right. So just to understand a little bit, in terms of, we're not talking about the market in general. We're not talking about a market that's in consolidation or trending or whatever. But these are typically pre-market reaction during the news releases and post news releases. So we would categorize them as more of consolidation phase, and then the development phase where the market is moving, and then the termination phase, which is very similar to a consolidation phase where market kind of stalls and doesn't have that energy like the initial burst when the news gets released. Okay. Oh, okay. So there's actually a question, which is very good. Why is gold the opposite reaction on the US data? It's not that gold is the opposite reaction of the US data, but again, I already explained this in the outlook today. But yeah, just to give you an understanding on how it works. If the FOMC continues to hike interest rate, the cost of keeping physical gold goes up with it. Okay, so it's not attractive. If the interest rate keeps going up, gold prices typically tends to go down, right? If the FOMC, for example, decides to pause interest rate or start cutting interest rate, then gold prices is going to shoot up. It's not how gold is related to the US dollar at all. It's how gold, kind of works together with the information that we have. Now, last week, if you saw a lot of that funny movement in gold, right? Initial reaction, let me just clarify a few things. This is not really news trading, but I'll just fill you in a little bit on what happened last week. So last week, we've got PacWest, which is a regional bank that's having issues. The stock prices keep falling down 50% every single day. Okay, that causes a run to safe haven. Well, when we talk about safe havens, gold is one of the safe haven assets. So we saw an increase in gold prices. And then the FOMC comes in and say, hey, instead of anticipating interest rate high, we are going to determine whether or not we need to hike interest rate. That sounds dovish. That pushes the gold prices up. However, with the NFP release, people are finding that the US economy is actually strong, right? So they abandon safe haven assets and they go back to the riskier assets, which is the stock market, or in terms of the currency market, it will be the Aussie USD, the Pound USD, the Euro USD, etc. So they abandon the US dollar. And because they're abandoning safe haven, gold as part of safe haven assets gets abandoned as well. So that's kind of how it works, okay, in a nutshell. But coming back to this, so yeah, we got consolidation phase, development phase, termination phase. That's part of the news trading. So before news, during news, after news, okay? So let me lay down a few general rules for news trading. Obviously, you need to study the market and the dynamics of the currency pair. You basically need to understand what you're dealing with. You cannot just randomly say, I want to trade news and I want to trade this on all currency pairs, and it's all going to have the same reaction. It's not going to have the same reaction, okay? For example, what happened with the US economy last Friday, the employment numbers, that has a high impact directly onto the USD pairs. The Euro USD, the Pound USD, the Dollar Yen, the Aussie USD, immediate impact, right? But the Euro Yen, the Sterling Yen, and Aussie Yen pretty much doesn't have any impact on it at all. So you need to understand what that news is and how it relates to what you're trading. So if you're looking at the US CPI numbers, but then you want to trade the Euro Pound, for example, obviously it doesn't have any connection at all because you're kind of excluding the USD. You're only looking at the Euro and the Pound, so it doesn't have a direct impact into it at all. Okay, so yeah, you need to watch out what you're looking at, and also you need to familiarize yourself with whatever currency that you want to trade or whatever assets you want to trade. So if you don't understand how the mechanics of gold is, and then try and learn how gold move or reacts to a certain news releases, and how the market sentiment play a big part in how gold is viewed as a safe haven. So yeah, you kind of need to at least get to know what you're trading. Okay, study the reaction of a currency pair to the latest news. This is something that can actually be back tested, right? Like last week, I gave you a snapshot of what happened during the previous NFP numbers. So you can actually go back to the timeline and kind of look at, oh, okay, so this is how the US market reacted during the CPI numbers, or this is how the Euro USD reacted during the CPI numbers and stuff like that. So yes, you need to study that reaction. Okay, you need to understand how it typically reacts to it. It's not going to be 100%, but you can get the picture. Like for example, with the NFP numbers, how many times does it reverse itself? I'll give you the number. 75% of after the NFP numbers, it typically reverses itself. Okay, so we got stats. Okay, prepare for trading. You need to mark the levels on the chart. So we are gonna go through some exercise today, but since there's nothing being released today, it's a pretty quiet pretty quiet day for trading today in terms of news trading. But we'll practice. It gives us a little bit more time to practice. But you need to mark that certain levels on the chart, right? We want to see that consolidation phase. We want to see how it works and stuff like that. Decide on your tactics, when and how you'll open that order, how you're gonna trade it, how you're actually gonna close it. Okay, so figure out your trading strategy. I don't like the word tactics, but yeah, trading strategy. Okay, choose a working time frame. This is very important because what I see in the 15-minute time frame is going to be different to what you see on the hourly time frame. It's going to be different to how other traders trading on a 5-minute time frame will look at. Okay. Determine the maximum risk for a trade, thinking about using stop losses and trading stop if you need to. Decide on the terms of the deal. Will it be a quick trade? Will you open that position? You see some profits, you close out and yell, hey, I made my day. Or you want to be more of a long-term one. Could it be a swing trade? Could it be more than an hour? Could it be within the day? Could it be within the week? I don't know. Decide. So I think even with the news trading, you kind of need to decide what you want to do with your positions. Is it something short term? Is it something a little bit medium term? Or is it going to be more of a position trade that you're going to hold on for a very long period of time? Okay? All right. Screenshot this if you want to. But you kind of need to understand a little bit of the buy stop and the sell stop. We take a look at the buy stop and the sell stop last week. All right. Buy stops are order placed above the current market price when price is rising up. Sell stop is an order that's placed below the current market price and it will trigger when price falls down below it. Okay, so I would say with buy stop and sell stop is this. If you want to see a breakout and you want to trade that breakout, then it will be more of a stop orders, right? Okay, so you can place a buy stop order to the upside, a sell stop if you want to sell it. Then we have the sell limit and the buy limit. A sell limit and the buy limit, it's really more for a market that's kind of range bound, right? A sell limit is basically an order placed above the current market price, and you want to sell that market. Okay, so for example, you're stuck within a range in the market and you want to short it, right? You want to sell, but I can't be in front of the computer. I need to step out a little bit, but I don't want to sell it now. I want to sell it at a higher price. That's where you do that sell limit, right? Buy limit is when you say I want to buy now. I want to trade. I want to go long, but I don't want to trade it at this level. I need to step out, right? But I want to buy it at a lower level. Then it will be a limit orders. Okay, so that's the difference between buy stop and I would just classify this as this. All right, take a screenshot, split it in half. You got a stop order, you got a limit order. Okay, if you are looking to sell at a resistance, that will be a limit order, sell limit. If you're looking to buy at a potential support, you want price to go down a little bit more, then that would be a buy limit. But if you are expecting the market to break through that resistance, then you want to be doing a buy stop. If you're expecting the market to break a support level, then it will be a sell stop. So I'll just show you the example here. So we got a market that's consolidating itself, right? And this is the same strategy that we talked about last week, which is the straddle strategy during the NFP numbers. But yeah, just to give you a general understanding of how it works. So we have what we call the corridor of volatility. That's, I'll put it in simple terms, what is the range of the market? All right. Once you figure out the range, then you get that corridor of volatility. So strategy is pretty simple. This is pre-news, and then I'm placing 2 orders. If price goes up, then if price goes up beyond the range, then I want to buy. If price goes down below the range, then I want to sell. Okay, so simple as that. This is a breakout strategy. You have a buy stop. If price goes above 1.0950, it's going to get triggered. If price goes down below 1.09, this is on the pound USD, on the euro USD, then it's going to be a sell. Okay, so this is a consolidation phase. News gets released. All right, activated your buy stop. Immediately cancel the other orders. Okay, depending on what it is, I think you can get a custom indicators if you're using MT4 or MT5 that can provide OCO orders or one cancel the other orders. But typically, if we're doing it manually, you saw that trade get triggered, like what happened on Friday. I immediately cancel the other order. Okay, so in this case, a buy stop got triggered. We are in that long position. Immediately close out the other order, okay, because we only need one order running at one time. Okay, so the development phase is when you see that run up during news releases. Okay, so and then market starts running. It's already way above your entry level. This is one strategy that you can use. You can move your stop loss to break even, or you can lock in some profits if you want to. Okay, so this is very important when it comes to news trading. Why? Because if you see a little bit of profit happening, you need to react very quickly during news trading. Typically, you really want to move your stop loss to break even as soon as possible, or to lock in some profits as soon as possible, just in case it reverses like what happened during the NFP numbers last week. Okay, so let's take a look at the market. So we've got the pound USD. There's no news coming out from the UK today. The UK market is closed. But just to give you an illustration a little bit on the fade trades that we have on last Friday, the NFP numbers happen, market goes down, and then it reverses on itself. So it fades back, it comes back to where it was, break the other side of the range. Now we have that resistance as a support. So we're going to make some adjustments on the pound USD for now. Okay, so I'm going to zoom in. So let's take a look at the market right now. I think this is on the 15-minute time frame, but I think we can take a look at it and say, yeah, do we have a range in the market? Yes. So we've got that as a potential resistance. We've got this as a potential support. I would actually increase this a little bit higher over there. Actually there, right? So I'm looking at the market right now, and just for example, news is going to get released in 50 minutes, for example. Then yeah, I would place a few orders there. Okay, I would trade. I would create a buy stop order over there, right? Just slightly above that, resistance area, and I'm going to place a sell stop just slightly lower than that. Okay, so I already got that place. So all I have to do is walk away from my computer. All right, just let the software run unless you're using VPS. But yeah, place it, leave it. Once it breaks, You can trade it. You don't even need to place the order. It'll automatically trigger it for you. Likewise with the Euro USD right now, for example, you can kind of the first thing you need to do is basically box the market, right? You got a few options. For example, with the Euro USD, you can use this resistance to there, right? This is going to be your box for the Euro USD. Or if you're looking at it from a much higher time frame, then you actually have a much wider resistance, which is over there and over there. And this is why I say time frame matters. So okay, for this example, I'm going to go on to the 5-minute time frame, and I'm going to create an order from a smaller range. How's that? Okay, so right now we're looking at I'll put it a little bit higher, maybe at 1.104. Right, a little bit higher. Nope, sorry. Okay. There we go. Buy stop maybe at 1.0415, and I'm going to have a sell stop just about there. This is on a 5-minute time frame. Obviously, it's different, right? I have two different orders. This is on a pound USD. This is on the Euro USD, and this one here is working on a 5-minute time frame. Are we going to trigger a trade or not? But just as an example, I already placed the order, so let's see if it hits. Okay, so yeah, we're seeing a little bit of a movement. Obviously, we don't have any news releases right now, so nothing is going to get triggered pretty much. But this is how you can place your stop orders, right? If you're expecting a market to break through a certain range, then you want to be using stop orders. How can we get volume on forex? There should be indicators for volume. I think there's a built-in one on MetaTrader, but yeah. Okay. Okay, so yeah. Unfortunately, we don't have any news releases today. It's public holiday in the UK. King Charles III coronation happened over the weekend. Today is it's holiday over there. Eurozone. I don't think we have any high impact news coming out from the Eurozone as well. Not today. I think we have a couple of not even medium impact, probably a low impact news numbers. We've got it's already out, right? The Eurozone. Germany industrial production numbers is already out. You got ECB lane speech at 9 on my time, so that would come in about an hour and 15 minutes. But yeah, that's pretty much it, right? So we got orders placed. We can live it, and we'll go on and we'll continue on. Okay, now let's talk about buy limit and sell limit strategy. This is when we expect a resistance to happen in the market. Instead of expecting it to break out, I want to create a pending order when it goes back to the previous high or the previous low. Okay, so I want to create a sell limit because I'm anticipating market to go back to the previous high. Okay, I anticipate that as a potential resistance in the market. So I really want to sell the market, but I don't want to sell right now. I want market to go up a little bit, and then I want to sell. But I might be away, so I'll create a sell limit order. Okay, so once it hits, it'll trigger it, and then it'll just run down. So let me just give you an example on that happening here. Maybe we'll use. How about we use? I don't know. Maybe gold. Right, maybe. I don't know. I think, let's take a look at gold. See if we can get anything out of gold. I haven't updated the chart information, obviously, so I have a huge gap in the market. That's not supposed to happen. But maybe let's use another example, right? Because I haven't got this one updated yet. Let's take a look at the Euro Yen, for example. Okay. So I'm gonna go on to the 5-minute time frame, for example. On the Euro Yen, Overall, I think we're looking at more of, still of a little bit of a recovery on the euro yen, right? So we anticipate a little bit of a recovery on the euro yen. Maybe I anticipate price to pull back down to close to about 38.2% Fibonacci retracement. Maybe around there, let's go into the 15-minute time frame just to give you an illustration on what it is, right? Okay, so I'm zooming in, and I think, just an example, okay? I think the euro yen could push up a little bit higher. And I'm looking at some key levels here. What we're looking at here, we've got 149 on the euro yen. Maybe I'll wait for it to go down a little bit lower. Okay, maybe about 148.95. I'm going to create a buy limit. Okay, so if price goes to 148.75, I'll pick my trade, and then it might go up. So I'll create the buy limit over there, and with the buy limit, obviously I can have my stop losses and take profit as well, so I can modify that. So I'm gonna leave this trade running. All right, I'm going out for dinner right now, so I want to trade, but I want it at a lower level. So for example, I can have my take profit, let's say I want to take it at 149.25. Okay, and I want to have my stop loss, maybe, I don't really want it to go lower than 148.80, so maybe about 148.75. Okay, so yeah, with that orders, I can create my target level, I can create my take profit levels, I can create my stop loss order. I'm looking at the hourly time frame, and I say, you know what, I think there's a little bit more room to go. Maybe I want to go a little bit higher, so I can adjust my take profit to a little bit higher. Maybe I want 149.50 instead of 149.25. Okay, so yeah, this order is placed. Now if it hits, it'll pick it up, and I don't have to worry about it. So, this is based on the assumption that I'm looking at potential support to come in. So you can do that during news trading as well, during news releases if you want to. But in terms of placing order, that's pretty much it. Very simple. All right. So this one here got updated. I think the news, the information got updated. So right now for gold, what do we want to do? This is on the 1 minute time frame. I don't typically go into the 1 minute time frame. I think this one here is still going strong, right? So maybe up there, I'm gonna create a little bit of a buy stop here, about 2027.50. Okay, so I'll modify this. I want to have my stop loss at that low there, about 2020. So I'll have my 2020 stop loss. And in terms of my take profit level, let's say I'll go with 2050. Okay. Okay. Cool. So we got an order placed. This is on the 5 minute time frame. That's pretty reasonable. I'm placing my stop losses below here. I'm anticipating this one here to continue to run up a little bit. So if it does hit my buy stop, then it will trigger an open order. So we got these orders all placed in. Obviously, the market has, there's no news in the market right now. So with that range that we created, that we place our orders, I have my stop orders, I got my limit orders. There's a lot of variation to that, but yeah, the choice is yours in terms of what kind of orders you want to have, what kind of anticipation that you have in the market during news releases. You can use several orders here if you want to. Okay, obviously you can do it manually as well. If you want to click in the market and buy and trade manually, you can do that. But the point for today, it's really more on us as a trader anticipating that news release. That's how we typically trade it. Okay. So yeah, the next thing is that you can also trade after the news releases. You can wait for that pullback to happen and do so manually if you want to. You can do that, obviously. So when it comes to news releases, you can trade it during news, before news, or after news. Okay, so you have your options. Typically, the buy stop and sell stop orders happen during news releases. If you're doing the buy limit and the sell limit, you typically do that after the news releases. Okay, so keep that in mind. Stop orders are usually for news releases at the time the news get released. Limit orders are typically after news gets released. Okay, so let's do a quick test if you guys are following me or not. So I don't know if you guys are paying attention, but all news can be divided into two categories. What are they? If you can type it in. And then what type of orders is most often used in news trading? I already just gave you the answer out. And can you also use ordinary indicators to trade the news? Okay, so if I can get a little bit of a response while I go through and check on the questions. Oh, someone's asking the Indonesian session. Yes, the Bahasa Indonesian session is going to be switched up a little bit. So we'll have the marathon webinars on Monday, and then on Wednesday we'll have the live trading sessions. Thanks for a very informative webinar series. Can you please advise if we can find online the reaction summary or stats based on news? That's a very interesting question. I can access this using trading terminals like Bloomberg and Reuters, but I'm not sure if there's actually free information out there on those. You might be able to try investing.com, I believe, or typically no, we actually don't see a lot of the reactions there. Trading economics is good, but I don't think it kind of keep tracks on how the market reacts, specifically because it doesn't. Again, every asset class, every currency is going to react differently. So this is probably something that's kind of impossible to compile as an information. Do I allow EAs that trade the news? I don't think there should be a problem with EAs on that one. How much trade good for a news trader in a month to control the overtrade? I would focus on the important news, right? So I think a lot of traders, when it comes to news trading, again, at the beginning I mentioned that fundamental analysis and news trading is two different things. When it comes to news trading, you really want to trade the one that has a higher volatility, the one that have that higher oomph in the market. So I think you can focus on a few. We already talked about a few at the beginning of the sessions. You can trade the interest rate decisions, the monetary statements, right? You can also trade the employment numbers if you want to. I like trading the inflation numbers a lot more than the employment numbers, because employment numbers, typically we see a little bit of a fade happening. We got a little bit of a reversal going on. Inflation numbers are pretty much straightforward in terms of where, if inflation is bad, then the interest rate is going to go up. If inflation is high, then yes, interest rate needs to go up because they need to control inflation. That's going to boost a certain currency and stuff like that. So it's a little bit more straightforward. But I would say, those three are going to be your key news. With the manufacturing numbers and stuff like that, it typically only moves to market if you get a huge surprise. For example, like the Chinese manufacturing numbers last Monday, that was a huge drop below 50. I think it was 53 to 49, I believe. It takes it down below 50, which is not good for PMI numbers because anything below 50 means a little bit of a contraction in the manufacturing sector, and the oil take a huge hit on it. Oh, someone answered. Nice. Two categories, unexpected news and periodic news. Two are going to be your pending orders. Yes, you can. Yes, news can be divided into two categories, which is the unexpected news or hot news, right? And the periodic news, which is the scheduled events. Yes. Pending orders, yes, and more specifically, the stop orders are going to be the one that's most often used during news trading. Yes, buy stop and sell stop, correct. Can you use ordinary indicators to trade the news? Of course you can. You can trade. You can do your analysis before the news, during news releases, post news releases. You can use all of the technical indicators that you already know, and you can apply it to news trading as well, which is going to help out with your news trading significantly as well. News CPI. We're going to talk about CPI. So if you want to know more about CPI, we'll talk more on CPI on Wednesday. We'll have about 20 minutes to talk about CPI, and then we have 10 minutes to set up the trade, and then we will trade CPI live, and you'll get a much clearer picture when we do the inflation numbers comparison to the NFP numbers, for example. Can we use ES to trade the news? I would say yeah. I mean, if you have an EA that can if you can punch in the number and say, hey, if it falls below consensus, sell this and that. If you can have an EA do that, I don't see a problem with it. But is there any specific EAs that I know that trade news? That one there, I'm not sure. I'm just being honest. Okay. So again, you can use this promo code nonfarm2023 if you want to. Valid until 17th of May for your double deposit bonus. Okay. Any questions? Any questions? More than happy to answer it. But yeah, in terms of can you use EAs to trade the news, I would say I don't think there's any limitations on what EAs we can use. Okay. So I just want to clarify a few things. Do we get it right that in news trading is different from fundamental analysis? Okay. News trading that we discussed tonight, it's really more on trading during news releases. Okay. What kind of orders you need to have, to prepare yourself for news releases. Fundamental analysis is a completely different thing. It takes time for you to understand fundamental analysis. Can you learn it? Yes, you can. It's just that with fundamental analysis, it's not going to be technical analysis where we say, okay, a certain pattern form, this is likely going to happen. It doesn't work that way. Fundamental analysis, you always need to look at the context of that news releases during that month. If the market, for example, right now is worried about the potential recession in the US that could lead to more of global recessions, then we need to include the potential for the US dollar, the Japanese yen, and gold to be potentially a safe haven assets, right? So on that context, any news releases, how is it going to affect this safe haven assets? If they don't affect these safe haven assets in a positive way, for example, if it doesn't cause worry in the market, if the market doesn't panic, then safe haven assets, people don't like it. People will move on to a riskier asset. They call it safe haven because it typically doesn't do a lot, in terms of crazy reactions. I think gold is the one that does crazy reactions. As a disclaimer, I don't trade gold and I don't like trading gold, but you guys do. Some people do. But yeah, can you trade it? Yes, you can, but there's certain mechanics to it as well. Yeah, it is recorded. What is the function of the yen basket? It would function the same way as the dollar index, I would say, because the dollar index is pretty much the dollar basket. Is it accurate though? The yen basket, I don't really rely on the yen basket a lot. In terms of the yen, the weighting goes a lot more on the dollar. So just by looking at the dollar Japanese, you can kind of get a little bit of a guidance in terms of whether or not the yen or the dollar is actually stronger. Repeat the promo code. It's nonfarm2023. You can use it until the 17th of May 2023. So if you want to use it, you better use it quick. This is only valid until next Wednesday. How does the RSI indicator in news trading? RSI works the same way in news trading. It doesn't really matter. In terms of during news releases, does the RSI work differently? No, it doesn't. So yeah, unfortunately, you're not gonna get a shortcut from that. Best currency for news trading is up to you. I'll be honest with you guys. I don't have a best currency. I like sterling. I like yen crosses, so I trade the euro yen, sterling yen, cable, pound USD a lot more than I trade the euro USD or the Aussie USD. So I have my own preference. I think the pound USD, it has a higher volatility. I like it. I don't trade gold because I think it has a ridiculous amount of volatility. It just doesn't suit my trading plan. So best currency for news trading, it would depend on what news you're trading. If you're trading the Australian inflation numbers, then obviously you need to trade the Aussie USD or the Aussie Japanese yen. If you're trading the Japanese inflation numbers or the Japanese Bank of Japan monetary decision, then you want to trade anything on the euro yen, sterling yen, dollar yen, Aussie yen. Okay, so best currency for news trading, it would depend on what news you're looking at. So base it on that. Okay. What do I think about Japanese yen pairs? I have my opinion on Japanese yen pairs, and I've already mentioned this on the outlook from about 2 weeks ago. So yeah, maybe if you want to review it there. But yeah, I'm not gonna say my opinion on that because it might be a little bit biased. Because as a disclaimer, I do have several longer term positions on yen crosses, very specific on yen crosses. Okay, so I think that's about it for these sessions. What's next? We've got one more session, which is the CPI numbers, right? This is going to be news trading. Last week we did the NFP numbers. We are going to be doing the US inflation numbers or the CPI numbers. I'll talk to you what are the inflation rate, what we need to look out for, right? What is the CPI numbers? What is the core inflation or the core CPI numbers? How do we actually read it? Because there's actually four inflation numbers, inflation readings every single month during the CPI release. It's not just the headline CPI that's important. There's actually four data that get released together with it as well. Okay, I did talk a little bit about CPI this morning as well in the Outlook. So again, if you haven't been watching the Outlook, you should watch the Outlook, which I publish. Which we publish every Monday. But yeah, I did talk a little bit more about the CPI, and then we'll do some real-time example on the CPI trading as well. All right. So with that, thanks for joining in. Don't forget, if you sign up for this webinar through an email, you should be getting the link to the Telegram channel on your email. Okay, with that, I wish you all a good rest for today. Good luck with your trades, and I will see you in 2 days' time.